Hey guys, this is Sean from Crypto XL, a company based in Canary Islands that train investors and traders to become profitable in the crypto market. Today in this YouTube video, we're going to be talking about order flow and price direction. So first of all, what is order flow and price direction? So as we all know, we have three types of market in in the in the financial markets. We have the bullish market where price is creating higher highs and higher lows. We have the bearish market where price is getting lower lows, lower highs. And lastly, we have the market that consolidates, we also can call range. The price is just ranging. So as we all know, this market creates high and high lows. And this creates lower highs, lower lows, sorry, lower lows and lower highs. And in this market, price just ranges. As you can see, it just creates liquidity on both sides. So in this market, the basic concept is to look for buys in demand zones, as we all know. I don't want to get into much detail in this because we get into so much detail with our private Discord group that we have. On a bearish market, we look to sell at supply zone, simple as that. And on a ranging market, we look to stay out of it. We don't want to be buying or you don't want to be selling because it's just liquidity. We as smart money traders we try to stay away from it. Now, let's look at some examples to see what do I mean by follow the order flow. So it's a simple concept. We all should remember this. Bullish market, we just look to buy. Obviously, in much more advanced term, you can actually look to sell in a bullish market as well, because you can counter trend trade this, but it's much more lower probability compared to this buys in a bullish market because price will do something like this before hitting your demand zone, before moving towards the upside. But all of this, there's a reason for all of this, which I don't want to get into it right now. And we usually share this in our Discord group, but this on manipulation and liquidity as well. But the price getting too much hit our demand zone before moving towards the upside. That is why selling in a bullish market is much more lower probability compared to buying in a bullish market. Same thing for a bearish market as well. If you move to the downside, you can counter trend trade this, buy this market all the way towards here, but sometimes price will do something like this and either move towards the downside or price will do something like this. Not like this, obviously, but like price will hit the supply zones after all this liquidity before moving towards the downside. So the easiest way to understand is just to sell in a bearish market and to buy in a bullish market. It's as simple as that. And obviously, we mentioned this previously as well. In a ranging market, we want to stay out of it. We don't want to be selling or buying. Now, let's take a look at some examples right over here. So clearly in Ethereum, we've been bullish right over here. Ever since this area from this high at almost 1800, we broke down and moved towards the downside. So ever since here, we've been breaking structure and just moving towards the downside. You can see we are bearish right over here. And we broke structure as well right over here after feeling some of this imbalance. But you have to keep in mind we have equal highs right over here, but it doesn't really matter. We don't want to get into much detail in that. Let's just look at order flow right now. We're bearish right now. So what do you want to be doing in a bearish market? You want to be selling in a bearish market. So right over here, obviously we see a supply zone. As you can see. Right over here, we see a supply zone. So we can definitely place a sell right over here and take price all the way towards this low because in a bearish market, price will hunt the lows. So ever since price created this entire move right over here, you could expect price to hunt this low. As you can see, this low has been hunted, this low has been hunted. So the next thing is this low. I know this will be a break of structure, but this is inducement as well, which we will talk about it later on. But right now, let's just focus on order flow. One thing you have to keep in mind is also picking out best S&D zones. There's a lot of different types of S&D zones that you can pick. There's best ones as well, there's high probability ones as well, like below 50% inducement, all of those we keep into accountable for the best S&D zones. But obviously all of those are shared with members as well. As you can see, simple as that. Hit the supply zone, go towards downside, hunting this low. Wait for the next one now. Just look at how price is moving right now. Right over here, obviously we have this supply zone that didn't hold, but you have to keep in mind this is not a good supply and demand zone. This is a better one right over here. This is a better one right over here. And also this wouldn't be a good one. This would be a better one as well, right over here. So either two of these supply zones could hold from moving price towards the downside. Just like that, valid. So even from here as well, we could have taken this short perfectly and it would have pulled until all the way until here. This is still valid. Keep in mind that yes, even though we are smart money traders usually when the supply zone is broken, they don't take the trade. We don't do that because we are purely based on supply and demand. So even though if this supply zone is broken, we still this trade is still valid because this is the process basically we call as absorption. The price just grabs the liquidity right above that high, but you don't want to get into much detail of that as well. It's all in our Discord. It's all available in Discord. But this concept, basically, the supply zone is still valid. We definitely look to sell, and price still moved down. It's still a great trade over here. And then price went down, manipulate this high before breaking down crazily. Now, this is a beautiful supply zone as well. I'll definitely take this supply zone this week. This week is supply zone because other than this, everything doesn't look that mitigated. It's probably a news event as well. I like this week supply zone. It's beautiful. And remember previously when I said that you can even counter trend trade this. And look, if you try to buy it, price is very choppy towards the upside. But this is a beautiful one. You can see demand as well. Price hitting all demand zone before moving towards the upside. That's counter trend trading. This is going to be our final example. Let's take a look at this. If we right over here, price tap into our supply, we can place this position right over here, all the way towards the downside. And this is a beautiful, not even this, you can actually close it. This is beautiful 1 to 11, almost 1 to 12 risk to reward ratio. And you can catch trades like this. We catch trades like this every single day in our private mentorship as well, in a private group as well. Trades like this is possible, guys. Trust me. We have so many students as well catching trades like this every single day. As you can see, that's how we do it. Price just basically moved down to grab all of these lows. And even, let's say, we call this entire move was almost a 1 to 10, 1 to 9.71 restoration. And that is amazing. To catch this in one trade, people make this almost in a month, and we can catch that in one trade. Just by understanding our price move is really, really key, guys. So keep in mind, open your charts, make sure to go study this, watch this video more than once to really keep this in your mind. Always remember order flow. If price is bearish, sell the market, don't buy the market. If price is bullish, always buy the market, don't sell the market. I mean, obviously, if you're an advanced trader, you can do both as well. Obviously, it's not wrong. If you're in a ranging market, you don't want to be getting in. That is key. Thanks, guys, for watching this video, and see you on the next one.